Well, we will be tackling three things for you. One, I'll give you a quick market overview, basically covering the past 3 months to present post ECQ. Second, I'll help you identify opportunities in the next 12 months in the real estate industry. And the third, we will be focusing as well on the must-haves, what you should do, what you should equip yourselves with to be able to adapt. Second, to keep up with the pace, survive, and our main goal, of course, is to thrive for this after this pandemic or during this pandemic. Well, going on market overview, economy in general, as we all know, has been soft and restrained. Of course, the real estate industry followed. Buyers in general are on a wait and see attitude. Surprisingly, though, buyers who have plans to buy pre-COVID, who have plans to buy during the pre-COVID are back aggressively. It is important to note, though, that these buyers are looking for good buys. So if we're going to put a number in terms of their offers right now, they are on the range after the ECQ between 5 to 10% already. Then if we're going to look at, well, the subsectors of the real estate industry, break it into, say, four: commercial, industrial, or steady. Retail was able to make adjustments. Residential, surprisingly, is moving. Most of probably the property experts had predicted that residential would slow, but after the ECQ, once we have gone back to work, gone back to basically moving the economy, residential is moving, especially on the leasing side. Then hospitality, of course, as we all know, took the major hit. Okay, I'll discuss quickly each and every sector. For commercial sector, again, basically covering office, retail, industrial. BPOs are still our main driver. Of course, direction of companies in times of crisis to manage costs and to outsource is always a logical option for them. Second, well, Pogo, you might be wondering, Pogos had slowed down, they downsized in the last 6 months. Grade B and Grade C buildings are suffering. Hundreds of SMEs, as we all know, are closing or downsized. And these are the main locators of these buildings. On the lighter side, of course, good news somehow. The Grade A and premium buildings are sustainable. On the demand side, these are the top companies that could ride the wave, of course, for the next 6 months. On the supply side, pre-COVID wise, or pre-COVID period, we've been enjoying a single-digit vacancy rate. Then on demand for warehouses, this has been steady for the last during the last 6 months, and even with the emergence of e-commerce, the need for warehousing and logistics, of course, is still there. Malls, on the other hand, are being creative, if we could say, converting their spaces to other use. For example, malls converting their current available space to warehouses. So again, they're being creative to be able to adapt to this pandemic. Residential leasing is steady, as I said earlier. Housing as being one of the basic needs. Of course, people need to rent or own the space, but if they could afford it, they move towards leasing. I'll discuss this later as one of the opportunities that the industry could take advantage of. Sales is still there, but on a relatively lower price. If you're going to put a number, the prices right now is between 5 to 10% level below the market value. We have also monitored an uptick on landed properties as opposed to condominiums. The primary reason for that is, of course, concern on health and exclusivity. Then we have also monitored move towards Metro Manila fringes, the likes of areas like Laguna, Rizal, Cavite, where it is less dense, again, because of concerns on health and safety. High-end is stable, as always. Demand coming from both end users and investors is still there, while supply, of course, remains scarce. We've also, one of the things that we have also monitored for the last 3 months is emergence on interest for bank-owned or foreclosed properties. Of course, the main reason or the main direction for residential is adaptation to new normal with emphasis on health and safety. Hospitality, when it comes to hospitality, as I said earlier, of course, they are the major, the sectors that are, the sector that is really majorly hit. They are somehow, the burden of the hospitality sector are somehow eased up by returning overseas Filipino workers and the BPO employees. Then we have also monitored increase on interest for private resorts for areas like Batangas, Bataan. And if you're going to ask me when will it recover, well, the expected rebound by this sector, hospitality, resorts, leisure, would be by second quarter of 2021. Then the beef of my presentation basically is well identifying opportunities for you. One, important to note that during time of crisis, we've seen it during 1997 financial crisis, 2008 financial crisis. Right after that, the gap between the seller and buyer is narrower or closer. During an up market, the seller is, how would I put it, not really that realistic when it comes to prices. And the buyer, of course, having that innate nature in them to ask for discount, so that the gap between them during an up market is really wide. But this time, this is somehow, well, one of the silver linings during a crisis that the gap is really narrow. The sellers are realistic. The buyer, on the other hand, is asking for discount. So it would be a lot easier to do transactions during this pandemic and right after this pandemic. Opportunities, of course, there will be good buys. Right now, we are on the level of 5 to 10% below market value. This could go as high as probably in the next 6 to 12 months to as high as 30%. So this is the perfect time for you to buy properties. Then for developers, I'm sure we have audience coming from the developer side. One of the opportunities probably that you could explore is the interim use of your property for leasing purposes. This is an interim source of revenue if the sale is not moving based on your projection. We have also monitored interest on staff housing, either in Metro Manila near CBDs or as far as Calabar Zone, Bulacan area, basically Metro Manila fringes. And then again, as I said earlier, there's interest on foreclosed assets. Invest as well on logistics and warehousing. Again, while we are moving towards e-commerce and online selling, there's always that need to there's always that need for logistics. There's always that need for warehousing. So it is one of the safest real estate sectors right now. Outsourcing, people will always outsource, so this is a good use as well for BPOs. Then one of the things that we have also monitored is the direction of the government to continue the infrastructure project, the build project of the government. So follow that route wherein prices would go up because of the infrastructure projects. Of course, needless to say that it will provide jobs and it will have domino effect on other sectors as well. Take advantage as well of the direction of the banks, of the PSP, for a low interest rate at this moment, which could be sustained in the next 3 to 6 months. In general, opportunity-wise, this is a good time to buy. Must-haves. Well, you have to equip yourselves with all these things. You should have an online presence. Your target market, 80% or 90% of them are online. So please have an online presence if you want to move your properties, if you want to be involved, if you want to sell, if you want to buy, be there, be in front of your target market. There should an emphasis on safety and health as always. This is one notch higher to the direction or the trend before of green technology. This time, after green technology, there should be an emphasis on safety and health when it comes to your offerings. Of course, maximize available platforms. Cash is king, liquidity, and as always, consult experts. As I end, let me just give you, or share to you this quote of course, Albert Einstein. in the midst of every crisis lies great opportunity. That's it. Thank you.